Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, October 2nd. We're actually going to start off a little different this week. We ended third quarter, absolutely terrible quarter, worst quarter we've had in the market since the fourth quarter in 2008. And, you know, this market has really felt like 2008. But we're starting off here with a view of all the sectors in the U.S. market, just to give you a little bit of perspective over the last month. Just how bad it is. Every single sector down. And if you look at some of the drops here, some pretty decent drops over the last 1 and 3 months. And actually, going back over the last 6 months, every single sector red. Now, you can drill down a little, but that just gives you an idea of just how bad this market has been, you know, over the last several weeks. Looking at the Dow daily chart, you know, we had another one of those 200-plus down moves where everything just sucked and the robots pretty much controlled everything. Quarter-end window dressing, so hopefully the carnage that we saw, especially in small and mid-caps, hopefully it's past. We're going to get a better idea of the strength or, you know, lack of strength in this market over the next couple of days. We continue to have that European hangover just, you know, looming around. These idiots in Europe, they move as fast as molasses. I mean, just to give you an idea, a lot of this stuff that they're voting on, the next vote doesn't come for another 2 weeks plus till the middle of October. So this is something that's probably just going to continue to, you know, dominate the headlines over the next several weeks, and, you know, could continue to be a frustrating market. However, we are seeing some crazy pricing out there, almost akin to what we were seeing back in January through March of 2009. And what followed thereafter was one of the best trading markets ever. So it's just a matter of being patient, being disciplined, and just waiting your time. This past week, I think it's the first time I went 100% cash overnight for a week, going back the 13, 14 years I've been trading, you know, and there's just, sometimes the market is just like that. The risk reward out there does not favor, you know, risking your capital for really piddly gains, just given the kind of drops we have seen recently. Looking at the Dow daily chart, you can see the 50-day moving average continues to be just major resistance. So until we get a break above that, we're going to continue to be stuck in this trading range of 10,600 to 11,400 to 600. You know, about a 1,000-point trading range. We do have a downward bias. RSI under 50. ADX shows momentum is clearly dissipating. We've got resistance on stochastics, and, you know, things just don't look that great. 15-minute chart. Here we have the 15-minute chart on the Dow, and I've sort of ignored this dip here just to give you an idea of this recent channel that we've been slowly falling in. This is what we call a bullish falling wedge. Typically, it breaks to the upside. This is not a typical market. If we get a break through that 10,900 level, we could easily see a retest of those previous lows. Indicators are oversold, but they can get more oversold, and that's something traders really need to keep in mind. Over the last week, one of the reasons I went 100% cash nightly was just the craziness we were seeing during these big up moves in the market. We would see the market up 200, 240 points, and the leaders, you know, Amazon, Apple, all the big high beta tech names, some of them red, some of them down decent, some of them flat, you know, not the kind of action that would tell you to go long this market. And then small caps, you know, if a small cap has not made a new low, and that was the trend last week, it's going to. And you need to be very, very careful of that. This is the kind of market that we're in right now, where caution rules the day. SMH has been our leader over the last month, and then over the last 3 days, just taken to the woodshed. Even on those big up days this past week, the SMH was actually down, and that was a signal to us a couple of times when you saw the Dow up 200 points and the SMH flat or up 10 cents. When I see that kind of action, I get really, really cautious, because 9 out of 10 times later in the day, you will see the market act the same way that the SMH did earlier. Support right now on the SMH, we're looking around $28. Now, one thing to keep in mind that we've seen happen over the last few days, the market's been going opposite of the closing trend. So on big down days into the close, the next day, the robots have been coming in and jamming the market up. On big up days, they've been coming in the next morning and bringing us down. So hopefully, even though we've got a negative bias looking at the indice charts, let's hope that the robots, which are thriving on the crazy volatility they're creating, turn around and pop us up on some benign news tomorrow. Probably nothing happened in Europe, so that might be their excuse to bounce us back. Bounce targets would be a move back to the 20-day exponential, $29.56 to $30 on the SMH. Quick mention on the US dollar is getting ready to break out here. And you'll see I've notated this circle here. Dollar move up, not good for market. This last big move we had on the dollar this time last year when it broke out like this corresponded with a 500, 600 point drop in the Dow over a week or two period. So what's funny is things have changed so much now that what was considered a huge down move last year, 500 points over the course of a couple of weeks, that's something we can do now in this market over the course of a couple of hours, just to put things in perspective. Russell, same sort of trading range as the Dow. Small caps have just been terrible. But we did have quarter end, worst quarter since 2008. And hopefully we saw a lot of selling in these stocks, even on the big up days. Funds just moving out of those plays. Going to be very, very interesting to see if we see some of these beaten down stocks bounce over the next couple of days. This is an example of what to look for. EMKR splat, especially over the last 3 days in the quarter end. You'll see this chart on a lot of stocks. Another one that looked like this, Sirius, splat, possible bottom. There's Pacific Sun, PSUN. These are the kind of plays we're going to be looking at over the next couple of days. If we don't see the market implode and we start to see the small caps bounce back, we've got another couple of key windows coming up. Quarter end or year end for a lot of hedge funds happens over the next couple of weeks. You've got a lot of hedge funds, their year end ends anywhere from October 15th to the end of October, October 31st, not December. So this typically every year is about the time you start seeing small and mid cap stocks trying to bounce, or bottom actually. Now, keep in mind, this is a very strange market controlled by robots, so this has been a year of past trends not really holding up like they should. So just keep that in the back of your mind. Going into this week, we also have a lot of big economic data reports. We've got durable goods, Q3 GDP, continuing claims, etc. So we're going to have a lot of economic data moving this market this week. And again, it's all going to depend on whatever bias we get from the slow pokes in Europe, unfortunately. So going into this week, the plan is going to be continuing to maintain mega high cash overnight, just given the craziness we've been seeing, and then see if we get some bouncer plays off these really deeply oversold small caps. And, we'd like to see some common sense come back into the market, where if we see a 200, 300 point up move in the market, we don't have 90% of stocks dead, or we don't have the leaders barely moving. That's a couple of the things we're going to be looking for this week. Be patient, guys. The pricing we are seeing out there is just, it's giving me goosebumps. It's just a matter of being patient. The last time we had this many beaten down plays was in 2009, and the rally that came after that was phenomenal. We are entering that next 4 to 6 months is typically the sweet spot for a lot of small cap stocks, and the small cap decimation we're seeing is everyone pricing in another recession in the US. I highly doubt that's going to happen unless we have some sort of climactic event in Europe, but those idiots will probably slowly work their way out of it. And even though the economic data has sucked, it's not that bad. We are still growing, not growing enough, but it's not pointing to recessionary things, at least at the moment, in my opinion. So that is it for the video. Any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.